Hello and welcome everyone to Gold Asset of the Day for the 27th of July 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So in the last week, we have seen hedge funds and money managers, they've increased their net long positions on crude oil, on copper, and also platinum, with a slight reduction on gold and silver. Last week, we talked you through in detail opportunities to be accumulating into gold sub $1,700 per ounce after the European Central Bank announcement. Last week, we saw a 600-point slingshot move higher from gold, taking it from 1680, which is the one-year lows, all the way up to the 1740 zone. So with that, I hope that many of you did capitalize on that. I know that many of you reached out towards the end of last week and over the weekend as we delivered the week ahead commodity report for you, saying that you capitalized massively off the back of that analysis. If you missed last week's report, feel free to go back and watch Tuesday and Thursday's commodities report, where we went through that in detail with you and our expectations for the European Central Bank to increase rates by 50 basis points. All of that played out. Now, this week, of course, we have the Federal Reserve. We have the FOMC statement on Wednesday. Expectation is they'll go ahead with a 75 basis point increase in rate hikes. And with that, we're seeing a very typical playbook into the central bank news items, which is for metals and commodities to be under pressure in the lead up to those news items, which we certainly saw yesterday with oil prices dipping $4 and gold coming back down towards the 1715 level. However, on the actual news item and later on in the session, often you do see breakouts to the upside, which give you an opportunity to capitalize on that volatility, lock in profits, and keep trading the ranges that we're seeing at the moment. Right now, these markets, they're not buy and hold. It's a trader's market right now. Trading the volatility is absolutely perfect. So far this week, we've banked 400 points on WTI crude oil, 300 points on Brent crude oil, which is actually a trade opportunity we highlighted to you at the start of this week on the commodity report for the week ahead, where if you were to see a gap down on the open with Brent crude oil, we would look to trade that gap back up again. In fact, that worked out perfectly. Within 24 hours after the Sunday open, we filled that gap on Brent and we banked 300 points on that trade. Also, at the beginning of this week, over a couple of trades on copper, we banked over 400 points as well. So far this week, and it's only Wednesday at the moment, we have banked over 1,000 points profit with our clients at the Gold and Silver Club on commodities. Again, all of these trade opportunities we've been highlighting to you on the week ahead commodity reports and on Gold Asset of the Day as well. So talking you through some of those trades that have played out as well over the course of this week. So copper, 3 weeks in a row now, hedge funds and money managers, they've increased their overall net long positions. Our expectation with copper has been, after we broke down all the way to 18-month lows at the beginning of July, we had formed a low, and we were going to capitalize on this slingshot move higher. As you've seen prices get to extreme levels of fear, we've seen hedge funds and money managers start to deploy capital back into copper. And we've also seen the Bank of China come out over the last week with more stimulus for the China economy and more spending on infrastructure. And with that, we are seeing copper break out to the upside. We've broken out towards 2-week highs now. Copper this week so far, it's up 2.5%. Last week, it surged 3% to the upside. So again, this is a position we've scaled into over the last week. We have a number of positions on this market which are delivering some great profits here. Now, as it relates specifically to gold over the course of this week, like last week, I see opportunities to be buying back down towards the 1700 zone, and I'm looking for a breakout back towards the 1745, 1750 zone over the course of this week. Bear in mind, at the end of the week on Friday, it is the last trading day of July. Typically, at the end of the month, you can see further outflows in commodities as traders are taking profit off the table. I am expecting some explosive moves off the back of the FOMC statement on Wednesday, through to Thursday as well, where we have GDP data. So again, at the Gold and Silver Club, we've been taking advantage of these lower prices on gold at the start of the week and last week as well. Each time we're getting back down towards 1700 or lower to accumulate further exposure. I still like gold this week once it gets down towards that 1715, 1710, 1705 zone. Again, you want to be very quick and nimble in these markets right now. Each time we do see these surges in price, whether it's on metals or energies, normally the price action drops fairly quickly afterwards and gives you another opportunity to bank at the high and reload yet again at the low. We're seeing it multiple times on oil over the last month. Lots of volatility, 1,000-point range bound moves on oil week to week for you to capitalize on. over the last week, gold has moved over 600 points from the low to the high. So again, it's a trader's market. It's not buy and hold. And in these times of heightened volatility, rapidly surging global inflation, it is a data-driven market where you want to be utilizing research data, market intelligence. Ditch those outdated technical indicators or gimmicky technical analysis approaches to the market. They just won't work in these market conditions. You end up getting chopped up all the time. It's not the 1980s where you're just limited to only looking at the charts. It's 2022 where you have available to you statistics, data, market intelligence. We are in a data-driven environment where you want to be capitalizing on all of the data which is available to you, utilizing that research-driven approach in the market, understanding and learning also the capital flows in the market, the daily, the weekly, the monthly cycles for each commodity, further compound that with the intermarket correlations, the ratios in the market, how the hedge funds, money managers, banks and institutions are positioned as well. That will help you massively. And of course, learning and understanding the narratives in the market, the fundamentals, the geopolitics, the macroeconomics, that will also help you massively to get an edge and position yourself correctly. So with that, if you would like to learn the research-driven approach to the market, join our community of successful traders and join our professional mentorship program. There is an opportunity for you to do so. Just make sure you click in the link below today's report in order to join our professional mentorship program.